Welcome, everyone. We are back for our monthly roundtable. It is July. It is a hot one. We are here with Steve Soretsky in Vancouver. Steve is an analyst and a realtor out there. How are you doing, Steve?
Doing well. Yeah, we just got out of our heat wave today, actually. So
And John, I feel like saying the Greek somehow. Polis esti. It's really hot.
You're
I heard that enough. It's very hot in Toronto.
Yeah, it's unbelievable. We're scorching over here. It's not usually this warm, so yeah.
Yes, it is sometimes. We always forget, and then we complain.
All right.
But yes, it's around 30 pretty consistently. The smoke is a new thing, though. The haziness has been tough. So John's joining us from our Philosophy Realty brokerage, our partner brokerage in Toronto. And let's talk about what's going on in the market. So just quick note before we begin. Viewer feedback. We are hearing you. I just want to reassure everybody. We've heard you. We've heard the feedback. You'd like to see more timely episodes come out, and we are going to work hard to do that. So we'll tighten up the turnaround between when we're recording this and getting this out to you, as obviously in real estate, everything changes very quickly. So thanks for that feedback, and I hope you'll appreciate the changes we're making going forward. Speaking of which, John, as soon as we dropped our last episode, things kind of changed a little bit in Toronto. When we last talked, there wasn't much changing since May. But then you started posting, I'm going to throw this tweet up here, that Toronto's market has turned a corner, literally, I think a couple days after we released our last episode, and that new listings are outpacing sales and inventory is gradually increasing. So does that mean we have to be tracking weekly now? What's going on?
Yeah, I mean, it's rare kind of moments when you need to track weekly. I mean, I see some people track weekly. I find it's a bit obsessive compulsive for the most part. Like, it's honestly like so much noise. I look at it weekly, obviously, but I think for the average person, I mean, looking at weekly stats, there's just so much noise. But you know, I track these things weekly to kind of look for some of these turning points in the market, right? And certainly we hit a turning point just after the bank hikes that inventory started to pick up. And this isn't, you know, I think on Twitter, a lot of people get confused. They think like, okay, inventory, does that mean like, it's either like it's extremes, it's either the market's hot or does this mean the market's tanking, right? And this is just a sign of a market that was overheated that's hitting the brakes basically, right? And this is very typical, especially as we move towards the summer, demand slows down. No one wants to look at houses. But it's not just seasonality. Like, part of it is this shift in sentiment. Buyers are hitting pause. You know, the rate hike, and not just the rate hike for the Bank of Canada, but the fact that drove up fixed rates so much is really kind of pouring kind of cold water on this really overheated housing market. And we saw that in the June stats, I should say, where, you know, seasonally adjusted sales are actually down month over month, right? So after we adjust for seasonality, sales are actually declining. So, you know, again, this is kind of consistent with what I was saying, that, you know, new listings aren't exploding, but they're kind of getting more back to, you know, decent levels, and they're outpacing sales basically right now.
So you talked about the June stats. Those are the latest ones for Toronto. And so the newspaper headline saying sales are down, that is year over year?
So no, sales are actually up year over year, and that's where it's confusing. Like, usually we're looking at year over year stats. Prices are up year over year, sales are up over year, inventory is down over year. All of those, if you look at the year over year stats, would suggest the market's kind of heating up. But you know, sometimes we got to look month over month to get an idea of what's going on. And it's not a market that's heating up, it's actually a market that's slowing down. So inventory from one month to the next is picking up. Sales adjusted for seasonality is actually trending down. So all of these are indicators of a market that's actually cooling, not heating up.
Interesting, even adjusting for the fact that it's the seasonality, it's summer.
Exactly.
Interesting. So Steve, what are you seeing in terms of the numbers, and the same on the ground in Vancouver?
yeah, I think John made a good point. Like, it's funny, like I've got like a whole portal that we built, and it shows like, you know, we've created all these like data sets. So we'll look at like new listings on a weekly basis and stuff like that, something of that nature. And honestly, it's so much noise. Like, I think people have to appreciate that real estate is not like, this isn't the stock market. It's not really going to change on a weekly basis. It's kind of like, as the market changes, it's like typically starts to happen, it gradually starts to turn. And so what I would say is, like, a lot of the times it's anecdotes. And so, like, if I look at the data right now, it's, again, if you're just the average person that isn't in the industry day to day, you might look at the headlines, the report that the real estate board puts out, and you'll see in Greater Vancouver that sales were up year over year and new listings were down year over year. So by that conclusion, you go, oh, well, so maybe the market's not changing. What I can tell you is, like, anecdotally, things are slowing down for sure. Like, we're seeing it in our business. I chat with colleagues in the office, a lot of top producers, they're noticing it's slowing down. Mortgage brokers, in terms of new applications coming in, I just love picking up the phone to saying, hey, what are you experiencing? And so it kind of gives you a whole bunch of different opinions, and you can kind of overlay that with your data, because, like, what I'm seeing in the data right now is nothing conclusive that suggests, oh my gosh, this market is taking a hard turn. But I expect it is going to slow down. We're obviously heading into the seasonally slower summer months. And then combine that with, your fixed mortgage rates have moved higher by just over 100 basis points in the span of 3 or 4 weeks. Like, that is going to slow the housing market. There's not a question about it. But waiting for that to sort of show up in the data, I don't think it has showed up in the data yet. But I can tell you anecdotally, things are just a bit slower, fewer multiple offers on offer night, but still competitive, still tight. If you look at total inventory for sale, it's still, like, outside of the bull markets of 2016, 2017, it's the lowest inventory we've had in basically 20 years. So it's like, there's really still not, like, it's still, like, you're still talking about the same dynamics, which is, yeah, demand's slowing, mortgage rates are up, but there's a seasonality component to it. But at the end of the day, there's still not a lot of selection, and that's going to take time. So you're going to have to see new listings continuously build. And so I'd kind of say, to round it all out, nothing necessarily conclusive in the data. We're seeing new listings start to normalize. We're seeing sales kind of back towards 10-year averages. So kind of just a dull market. And I think that things will continue to slow here in the months ahead.
All right. Well, speaking of waiting for things to show up in the data, Steve, you said listings are starting to normalize. Now, for many, many months, listings have been at a historical low. We've talked about maybe why that is here. Maybe people are stuck, not able to sell, move up, given high interest rates. But now you're saying listings are normalizing. So people are going to accuse us of realtor talk. Does that mean listings are creeping up? And is this the start of that listing surge that we expected when Canadians finally start to see the impact of these higher rates, maybe investors hanging on to second, third properties that they bought recently, being unable to manage the finances? Do you think the reason that listings are coming up is part of that, the start of that surge people have been talking about?
I mean, I've been on the show quite vocal about it, which is, like, in 4 of the past 6 months in Greater Vancouver, 4 of the past 6 months, you've had 20-year lows in new listings. Clearly, that's not sustainable. And so we knew at some point, like, listings were going to at least get back to a more normal. And so I think we're starting to see maybe that more normal. Again, it's only like 1 month of data, so I can't, like, draw any, like, drastic conclusions and be like, oh my God, here it comes. Like, if you look at it, new listings, this is for all property types, are still below the 10-year average. They're still about 5 to 7% below the 10-year average. So it's like, we're getting back to what you would expect. Now, again, there's no evidence to me right now that there's a wave of distressed sellers hitting the market. I'm not really seeing it anecdotally, not really seeing it in the data. Again, is it going to happen? Maybe it's more of a 2024 story. I think there's certainly people out there I know that are struggling with their variable rate mortgage payments, and that are, definitely shocked by their mortgage renewal coming up, and they're renewing at 6% and they're coming off a 2.5% mortgage rate. Like, that is happening. And so I think that I still think we're going to see more discretionary inventory coming to market, which is, like, not necessarily people selling, like, their primary residence, but hey, I have, 2 investment condos. I'm maybe going to sell one of those 2 to sort of clean up my balance sheet. I think that's going to be a story probably more for 2024.
All right, John, and same question to you. Is this the start of the great listing surge?
Yeah, it's not. I mean, and the trends that Steve's talking about are basically very similar to Toronto, where we're seeing, new listings kind of get off of kind of these unbelievable lows that we've been talking about on the show for the past few months. But yeah, it's not a huge surge yet. Again, I think like Steve said, inventory is still pretty tight. I mean, we're still a seller's market. I mean, there's still bidding wars going on. There's still like 10 offers on nice homes, and yeah, as the market shifts, we're seeing, some of those fail, obviously. But yeah, I don't know if we're going to see this massive surge in the fall market. I agree with Steve. I mean, again, like when we think about distress, it's, the longer rates stay high is like when things start to crack, you know what I mean? And it could very well be a 2024 story. If rates stay this high, and all signals are that they may stay this high probably till at least the first quarter of next year.
And unpacking just a little bit of jargon again, when you say that we knew the listings had to come back up, that's because presumably sellers who had been waiting, there's some portion of those sellers who have been waiting, trying to, postpone their sales. Eventually they had to go on and live their life, or whatever was motivating the sale in the first place. So that's what I presumably you mean when you say at some point you expect some of those listings to come back.
Yeah, I think it's just hard to pinpoint like one thing, like this is exactly why nobody was listing. It's like, I think there's a multitude of reasons. I know we've talked about it on the show before, which is like, I think, raising rates 400 plus basis points in span definitely shocked the system, right? When people see 100 basis point hikes at a time, people go, oh gosh, what's going on? Like you basically froze the market, right? So it's like, people are okay, like, well, I'm not really sure what to do. This doesn't seem like a good time to list. Like there's literally nothing going on. Usually when you sell your home, you need to buy something else. And so again, if there's no inventory, it's just tough. And then again, you think about people that even like want to upsize. It's like, well, okay, you got to qualify to upsize, right? And now today you're getting stress tested at 8%. So like, I just think in general, like all of this is kind of just like stymied like housing activity. And like, I'm sure John can probably come to the same conclusion, which is it's funny to see like these economists coming out and saying, oh, housing market's like still, showing signs like it's reinflating. It's reinflating on low inventory. Like I would say in general, like over the past 12 months, it hasn't been a strong housing market. It's been like low volumes, low sales, low listings, low inventory. There hasn't been a lot of turnover. So if you talk to any like realtor or mortgage professional where their business is based on like turnover volume, it's been a down year for the industry because there hasn't been a lot of churn. And so that's kind of how I look at the market. It's just strange. I'm surprised it hasn't necessarily cracked. We haven't seen more like sellers coming to market with like distress. But I think that just takes time. 1/3 of people haven't, or only 1/3 of mortgage borrowers have actually seen a payment increase.
Yeah. John, actually, I wanted to ask you a little bit about that. Like Steve touched on the fact that people are talking about housing inflation, and the only thing that seems to be up, Steve mentioned everything being down, prices. Prices are holding and they're up because fewer buyers are fighting over fewer listings. But the other thing that's really strange is the CPI numbers that came out. It's showing that housing inflation, because of the rise in interest rates, is now contributing very strongly to the CPI index. And interestingly enough, I think a figure that showed it rose by 3.4% in May, the lowest inflation increase since June 2021. But if mortgage costs are stripped out, the CPI rose only 2.5% in May. So, it is a bit of a mixed message, and it's very confusing. As Steve's saying, that housing market is slow, but housing inflation is up.
Yeah, I mean, and that was actually, and it's a good point, because I think a lot of people found it confusing when the market was ripping during COVID. The inflation component of CPI for housing was actually like unbelievably low, right? Because rates were low, like rates were like 1% or 1.5%. And this is, inflation for housing, at least the housing component, is largely driven by interest rates, right? So there's this like inverse relationship when rates hit the floor, even though houses were ripping 20-30% per year, the inflation for housing was low, and now even though prices fell 20% because rates were so much higher, the inflation is through the roof for housing. It's like it's working kind of in the opposite way of what one would typically think, for sure.
I think that's such a good point, though. Like, everyone's like, yeah, national house prices ripped 29% on an annual basis, which is the fastest price appreciation on record for that benchmark going back 20 years. And these guys were like, there's no inflation, shelter inflation was incredibly low. They raised rates for the first time in March 2022, 1 month after the housing market had already peaked in February. So it's like, I just don't think, and obviously, hey, this is someone in the real estate industry speaking, so there's a bias, but like, I just look at it and think, I think they've already over tightened personally. And I just think, like, yeah, you've got a lot of smart people at the BOC, a lot of PhDs, but like, they miss the inflation on the way up, and I just think they're going to miss I think they're going to end up over tightening on the reverse as well, right? It's like, it's just interesting. I mean, again, first rate hike in March of 2022 kind of tells you all that you need to know.
Mm-hmm.
Like, everybody, John, you and I were doing these videos with Yahoo for 12, 18 months leading up to that rate hike, and we were like, listen, this market is out of control.
Yeah.
And they kept saying like housing was transitory, it's just a pandemic, like built up boom, like nothing to see. And like, everybody was adding to their investment portfolios. Everyone wanted a new condo, a second pre-sale investment.
I mean, even worse, TIFF actually went out and said we need the growth that we can get when people were concerned that prices were ripping 20% per year. So yeah, it's a bit crazy.
Yes, dare we say might have been part of the plan. On the note, let's move to that federal level. So I know we all enjoyed Happy Canada Days. I think we're all a little bit more tanned. On July 1st, Canada celebrated as well, along with all of us. And Canada turned 156 years old. So congratulations, Canada. And we hit a new milestone, a population high of 40 million people. This is discombobulating. I've been using the rule of thumb that we're 30 million and the US is 300 million for my whole life. So I don't know how I'm going to adjust to this 40 million figure. It seems very alien, but here we are. Now, I think I'll just say the idea behind these pro-immigration policies that has led us to this number is to head off population decline and the negative impacts on economic growth. We know this is a concern in many, many developed countries and G7 countries. But the speed of this increase, this population increase, has resulted in reactions of pure frustration and belief in all quarters. Online, from friend of show, Ben Rabideau, the tweet here, Canada's population grew by 1.2 million people in the past year as of Q2, all for thoughtful immigration, but this is absurd, crazy, irresponsible number. And we see the spike there in the graph that he shared. And then we also heard from Kevin Bryant, economist at U of T, who also shared some figures. Canadian population growth recently is unreal and much higher than the government announced targets. In the past year, Canadian population is up 3.1%, almost wholly net immigration. That's the 9th highest population growth rate in the world, even higher in Q1 of 2023. So not just COVID catch up. So if it comes to making our population grow faster than in some quarters, I've heard we're even faster than some countries in Africa and Asia, it's happening. But what do we make of it, guys? Steve, let's start with you.
I mean, I think it's irresponsible personally. I think that, we're obviously having issues housing our existing population, and I think that, we can obviously talk about the lack of infrastructure to support the growing population. And so I know the government's now saying, okay, we're going to build more housing, affordable housing is on the way. And, they build like 10 units in like the middle of Ontario somewhere, and then they pat themselves on the back. And so what I can tell you is happening in BC and Vancouver in particular, like a lot of projects. So like we have like a decent pipeline right now in terms of units that are under construction. So like I'm not really too worried in the next like 24 months. But what's happening right now is housing starts are falling rather precipitously. Because the reality is, the cost of construction, per RBC is up 54% since the start of the pandemic. So you've got massive inflation in material costs and wage costs, and then you've got almost tripling in your construction financing costs. And so what's happening is these projects are no longer economically viable, and so developers are saying, you know what, we've got to pull it. And so housing starts are rolling off, and so that's actually going to create, I think, supply. We're going to still be talking about supply issues or housing. We're going to be talking about housing affordability 5 or 6 years from now, because it remains a challenge. You're immigrating a lot of people. We need immigration, but we're immigrating a lot of people, and we're just right now, because I think, again, the Bank of Canada, by raising rates, it is stymieing production in the housing sector, and so you will see supply come offline, and that's not a problem necessarily today, but 4 or 5 years from now you'll see that.
John?
I mean, yeah, it's an interesting. I think it's an interesting challenge. I mean, I tend to agree with Steve that it seems irresponsible. I mean, you have a housing crisis, you have a shortage of housing, and it seems like their solution is just to ramp up the demand and need for housing, which seems backwards. And I mean, to put population numbers into context, before 2015, let's avoid immigration, because this is actually not all immigration, right? Like, most of this growth is actually non-permanent residents. Part of it is immigration, but if we just talk about population growth,
Sorry to interrupt you, John. So by that, you're saying it's students, it's temporary workers, along with permanent immigration when you say that.
And the non-permanent residents, I mean, many of them, of course, are trying to transition to becoming permanent residents, right? So this is a pathway that the government has. You go to universities, you go to colleges, and eventually you become a permanent resident. So, but they're technically not new immigrants, because many of them are students, or they're here short-term trying to be, permanent residents. But they're new people who need a house. That's the whole point, right? Like, even if they're students, it doesn't matter. They need a bed to sleep in. They need somewhere to sleep. They need a home. And before 2015, Canada's annual population was growing anywhere from 350 to under 400, like 380,000 people per year, right? So under 400,000, and that was for decades. So we've gone from under 4 to 1.2, and we're not building any more housing. And that's the challenge. And when we think about, why home prices, not just home prices, why rents are exploding, like rents up 20% per year is insane. And again, this is all a byproduct of the need for somewhere to live for all of the, people that are coming, and just our inability to build more housing. And housing, despite what some housing advocates like to argue, it cannot triple overnight. Like, it's just not possible. Like, BMO had a report last month, and I think Steve tweeted it, that had a great chart that showed a relationship across countries of their annual population growth rate, and I think it was like their annual growth in house prices, right? And it was highly correlated. Like, it was like almost like a perfect regression. It's like the countries with the fastest and most rapid growth are seeing the most rapid growth in prices. And that's just because you can easily double the rate at which your population's growing. I mean, we've tripled it, quite frankly. But you can't do that with housing, because housing has a lot of frictions to just ramping up supply. And it's not just zoning. Like, I did work for the government of Dubai back in 2017, and they were building infrastructure so quickly, and they're furious because the private sector couldn't keep up, like, to build housing, that you just couldn't keep up with the demand. So it's not just, what's possible. Like, it's very hard to scale up housing. And I think this is going to weigh on rents and housing costs in the future, for sure.
So when you see like these housing starts like rolling over here, it's not that simple to just like flip the switch back on
Yeah.
And there's housing, because again, it's more like, and I think that's obviously a lot of like the red tape stuff. In Vancouver, in Toronto, particularly, obviously large, complicated municipalities, it's incredibly difficult to build housing here. I mean, I tell a lot of my clients here on the residential side, I'm like, you might have the money. I was like, you do not want to build a single family house in Vancouver. Do yourself a favor and just like buy a newer house that's already been built by a developer, or go buy an old one and renovate it, because you are just asking for it. It's just the amount of like hoops that you have to jump through to try to build a house here. It's just insane, and it's so expensive.
Wow. Even single family, eh?
So if you build a single family house in Vancouver, let's say you got a piece of land on the east side of Vancouver, and you want to build, again, you're not a home builder, so you're going to hire a builder, and you're going to say, I want a mid-range house, nothing fancy, but decent finishings. You're going to be probably, at least for a 2,200 square foot house, you're going to be at 1.2 million just for the house.
Okay.
And then you got to finance that for the construction. So, I mean, obviously your financing rate today is going to be you're probably paying 8% at least minimum for the construction financing. And that construction is going to take minimum 12 months to build that house. So yeah, it's just incredibly expensive, right? In the dirt, you're buying a tear down lot for 1.7, 1.8.
Wow.
So, right. So it's like, even if that, let's say that 1.8 house drops down to 1.5 over the next 12 months, because the housing market corrects here, 1.5 plus, like I said, 1.2, it's just, that's why nobody really builds single family houses anymore, and we're all building condos and townhouses, because it's not economically viable. It's just not enough people that can obviously qualify and afford a $2.8 million brand new house.
Mhm.
Right.
It's
So
even here, I mean, it's expensive, but one of the challenges, even in building here, I mean, we talked about this in the past, they legalized fourplexes, but like land values are so high, like it's largely not economical in most places, right?
Same thing here.
Yeah, just because the price of land's so high, like you'd have to like allow 8 units or something, before you start getting into something that might work.
And we're talking like, you might be like a year in permitting too, right? So you're like a year in permitting and then like another year to build. So if you've got all your ducks in a row, you might be able to start and stop this project, within 2 years, hopefully. But the problem is like, 2 years, it's like, yeah, you have to basically carry that cost. So 2 plus, it's basically $3 million. The bank might give you 65%. So you got to come up with 35% of, 3 mil. And then you have to carry, not only that, but then you got to carry the other 65 in debt for basically, 2 years. So for most people to carry, to deploy that much capital, and then to carry that amount of interest for 2 years while you build a house, it's really difficult to do. Like the average person cannot, and should not be, doing that.
That's why investor demand, I think I've seen in Toronto, is like slowed down a lot. Like, especially people who build, renovate, like, cost of capital so high. There's so much uncertainty. It's like they don't know what the home's going to be worth when they're done. Like in the past, half of these renovators or flippers are just banking on the fact that prices are going up 7, 8, 10% per year. They're actually like, it paid for them to be crappy builders to delay their project because it was going up 10% per year, right? But when the market's flat, you can't benefit from these rising prices. So it makes it way more, way riskier for a lot of flippers.
right, and not only not only flat, but emits much higher interest rates on top of it.
Yeah,
I remember hearing like lots of stories and like clients and stuff, like, yeah, like, like, come sell this house. Our dad, like, he built this house like back in the 50s or 60s or something, and it's like, when it was $30,000 for the dirt, and then another whatever, $20,000 to build the house, right?
Yeah.
And or whatever it was back in the 50s. But it was so, yeah, it's interesting. Now it's an environment where, again, like costs of labor and the skilled trades, it's like, and people keep saying, yeah, well, cost, 1.2 million to build the house, that's going to come down, it's so inflated. It's like, yeah, maybe, I think it'll come down maybe marginally. So maybe
Yeah.
instead of 1.2, it's 1.1. But like, are you really like? I would argue there's a shortage of skilled labor in this country, and so it's like, are you really going to convince the electrician and the plumber to take a materially lower wage?
Yeah.
I'm not convinced. I think there'll be some wage pressure, but
I mean, and this goes back to why we're not solving this crisis by like everyone's dream of tripling supply or
it's
doubling.
stupid.
It's impossible, man. Like if you read anything, like construction costs are like through the roof. Okay, that is not the right starting point for doubling completions. Okay, like think about what doubling demand for construction housing does to those costs. I mean, it drives them up even further. And like Steve said, we have labor issues in construction. So this is, we're not, yeah.
Well, ironically, we're introducing a new vicious cycle where I've even seen politicians say, well, actually, even Pierre Poilievre will import a lot of these new construction workers to help us build the housing. And then we're back into the vicious cycle with our population numbers. So, I'm hearing intense frustration from you guys. There is not a good understanding of the supply side of this. And the one lever that can be pushed on the demand side seems to be, just open and like we're leaving it to flood, basically.
Yeah, sorry, I just wanted to quickly chime in because John, I know what you're talking about, because there's like a cohort on Twitter that keeps posting about like, oh, we need to like triple our housing starts or completions or whatever it is, like per CMHC, and everybody keeps quoting this like CMHC article that says you need to hit like, what is it? How many more homes is it? Like 2 million homes or something by 2030?
Yeah, exactly. 2.5 or something like that by the end of 20.
So I read that report, and it's like it's based like what they're saying is like that will make housing quote unquote affordable, which means like by adding all of the supply, you'll get prices down. You'll have enough houses basically that it pushes the prices down. But the reality is like no private entity developer is going to build as house prices are falling.
No, exactly.
It's like it just destroys the pro forma. And like are the banks like, in Vancouver, you got to typically pre-sell 60% of your units. So usually when prices are falling, everybody's nervous as hell. Nobody wants to buy. When prices are falling, everyone thinks that they're going to keep falling. And so it becomes hard for a developer to like pre-sell units. Thus, they can't get financing from the banks to actually build. So it's like, when house prices start falling, usually like as we're seeing now, right? Like it's economical. And so you thus can't build, and thus it's like, it's so stupid to say that you can just keep building and building and the private sector is going to continue.
Love the market. Yeah, I mean, and the tripling isn't just CMHC. I mean, the province of Ontario and even Mike Moffat, who researched, I mean, he came out for Ontario and basically said Ontario needs to build 1.5 million homes. Okay, in 10 years. We normally only build 650. So,
650 over a 10-year period.
Yeah, over a 10-year period, rough, something like that. Yeah. But we need to go to 1.5. And that was before our population was growing over 1 million people per year. That was back when we were growing by like 750 or 8, right? So it's everyone's kind of coming up with these numbers. It's like the province economists, and it's just like I mean, if that's the solution, we're going to have like a bit of a problem in the years ahead.
Well, I think we already have a problem. I think everybody just announces their targets on what they're going to build. People point out that we're not even building what they last announced. Yeah. And then the party continues. And that's at all levels of government, federal governments, provincial governments. Even in Toronto, a lot of frustration. We had an initiative to build houses. I think 0 houses were built under the Housing Now. Can't think of anything more unfortunately named. So a lot of frustration on that level, but I have a question for you guys. And this goes back to what some others are noticing on social media. Is the government and all levels, the federal government, especially with their runaway population numbers on top of it, getting away with all of this? Because for most Canadians, there really is no housing crisis. And I say that because there's a tweet shared by also a friend of the show, Brunt. For many people in Canada, there is no housing crisis. All levels of government depend on that fact. If you bought a house in Ontario before 2013, there is no housing crisis. In fact, if you just own the one house and your mortgage isn't renewing now, things look pretty good. So Steve, what do you make of Ron's point? Like, are we like, oh my God, the ship's on fire, but nobody else is noticing? But actually, maybe other people have a reason not to notice.
Well, I think it's a lot of political theater, like for sure. Like I think, everybody likes to talk about affordable housing. We're going to help you. We're going to get the bad guy, vote him out of power, vote me in, I'll fix housing. And like, we've just talked in this whole show. It's a very complicated problem that we have. There's not like one solution that you just like, oh, cut the red tape and then like all the problems will be fixed. No, that will help. But then, you got to talk about population growth, interest rates. Obviously, the Bank of Canada kept rates at zero for almost a decade. That probably didn't help housing. So there's so many like factors, but I think Ron is making a very good point, which is I'm a cynic by nature, and I just think I'm extremely cynical that I don't think this problem can be solved, at least not in the next decade. And so, I'm hopeful that it will get better, but I still think you're going to be talking about housing affordability 10 years from now.
For sure. And on that point, John, you also tweeted along the same lines. A recent episode of The Agenda featured a guest, Ricardo Tranjan, I believe he's an economist, who came on to say, what if there's no housing crisis, but rather the market is working as intended to make the rich richer and the working class beholden? So his argument's slightly different, that the reason we're not feeling the crisis at large is because renters are really bearing it. And, for whatever reason, they're not a class of voters that politicians are too troubled by.
Yeah, I mean, I think he's 100% right. And it's kind of along Ron's point. I mean, anyone who owns real estate does not feel a freaking crisis. All of our values have gone up. You know what I mean? And yes, you may want to upsize, but if you've owned for 5 or even 8, whatever it is, that investment has gone up. So you're in a better position to upsize than if you're trying to buy your first home, right? So this crisis is not falling on homeowners. Like, we're all freaking laughing. Anyone who owns a home is doing very well. And if you own investment properties, you're going to do better because that wealth is kind of spread off over multiple properties. He's right. I mean, this is all falling on renters. I mean, unfortunately, that is like the worst part of this. Like, this whole boom, the weight of it, the pressure on housing affordability is actually falling on renters. They're seeing rents surge. And of course, not only are there rents surging, anyone who wants to actually eventually buy, they're facing higher rents and higher home prices, which is making it almost impossible to buy, basically.
John, just to quickly chime in there, though. So I'm kind of curious, like, your opinion. I have my own opinion on this, which is like, I totally agree, right? It's like, yeah, it's tough for the renter class, right? So like the reaction from these politicians has been like, okay, you guys need a break. So what we're going to do is we're going to cap rent growth by 2, in BC, we capped it at 2%. And it looks like Ontario, you guys have capped it by 2.4% for next year. But at the same time, you're also saying there's a supply issue and we need to get developers to get their shovels in the ground and build more rental housing. But as a rental developer, you're basically saying, listen, guys, your profit is going to be capped. So your expenses, like your inflationary cost to build and maintain the building, are going up 5, 7, 10% a year. And you can raise your rents 2%. So it's like, I get it, because like the policy is like, you're trying to help the renter that needs a relief, but at the same time, you're kind of screwing them in the long run, because you're basically, I mean, I can tell you, like, any developers like in BC, we're not building rental housing because the numbers don't work.
So I don't know if I buy that argument. And I think I'm one of few landlords who's relatively fine with rent control, and not that 2.5 is the right number. I mean, especially,
I don't disagree. I think there should be like an element. I don't have a problem with an element of like rent control, but I just look at it and say like 2%. And then like you think about like your mortgage costs, your insurance costs, your cost of maintaining a building. Like, there's been a lot of inflation in that sector.
Yeah, I agree. I mean, 2% seems low when inflation is ripping, obviously, but I think renters should get some security. But I don't like, the challenge with this argument is like, the rent control is the problem, is that for decades, new properties in Ontario were not rent controlled. Anything built after 91 had no rent control. but no one's building it. So like this argument that it's all rent control falls through. And I think what is happening right now, and CMHC actually published a report looking at the financial feasibility of actually building purpose-built rentals. And what looked like was actually the biggest problem was that when you factored in the cost of construction, building, and the rents that they could achieve, it didn't make sense.
Right.
Okay. And what's happening there is basically, I mean, if you kind of break it down, it's that builders are not willing to pay what these mom and pop investors are paying, who are just banking on the capital gain, because the builder wants a certain guaranteed return year over year on their cash flow, on their rents, right, on their yield. And they're not getting that because the cost of construction, the cost of land is too high, and or the rents are too low. So what do? Just build condos and sell them to mom and pop investors, right? And that's been the biggest gap, it looks like. And that's why like there's a lot of calls for CMHC to help by providing cheaper financing and all of this stuff. And, you know, people have been calling to remove development charges, HST on purpose-built rentals, which 100% they should be doing to encourage more of it, right? But I think it has more to do with those things than, you know, fine, rent control is one thing, but I think it has to do with just like the basic economics of it. Just it doesn't.
Yeah, I think that's a fair assessment. Like
can I chime in with another viewpoint, which is, I think, John, you make a great viewpoint that it's the expectations of those investing in housing and the needs for them to respond to their various stakeholders, investors. There's been one party missing at our table, which has not been missing in Europe and in other countries, and that is the municipality as builder or the government as builder. Mm-hmm. And that's been missing in Canada for a very long time. There's been spurts of it in Toronto, you know, very small little experiments. And I think some of that research shows that, for example, in Berlin, places where there is tremendous rent control, that does not correlate to the number of rental supply coming onto the market. A country where most of their population are actually renters. So
because the government is stepping in and saying, listen, we're going to fill the void. Like right now, right, the private sector pulls back because the economics don't work. But if you're a government that basically has like essentially an unlimited balance sheet.
Yes.
We're going to dig into that. It's actually more than that, Steve. It's when your focus is that, like when your whole society is 80% renters, you have a huge system that plays to that. So, for example, here, our attention is on, okay, if I raise interest rates, what are our starts going to look like? That's what builds our impetus because of the way that our housing market is structured, right? So over time in Germany, it's a collection of private actors. Actually, German purpose-built rental companies are some of the biggest in the world. They then exported that expertise and brought some of that to Canada as well. So the interesting thing, though, is it's a combination of they've had this rent control, this culture for so long that shaped the economics and the things that those actors do in that country over time. And so that's an interesting point that I think we want to dig more into. But so I don't think, in my opinion, it's one factor that is the reason that Germany has that. I don't know, John, what you've seen in the research.
No, but I think, I mean, you both kind of raise a good point. I mean, and this is why I'm not optimistic about our government solving anything, because in a period where construction starts are down, this is a period where the public sector, the government, the federal, the provincial government can ramp up supply. And I know a lot of people are like, oh, we don't want the government housing, but that is where you're going to get affordable housing. Like the private sector is not going to build below market rents. Okay, that's just a fact. So if anyone's building it, it's subsidized by our provincial, federal governments, municipal governments, and they're not doing anything. And you need that segment because you're right, we haven't built any of that. And like Steve said, they actually do have an unlimited balance sheet. Like this is not spending, this is capital investment, right? And they could be investing in housing and they're not. So how do you really take their promises about, you know, increasing supply seriously when they're not investing in housing directly?
Well, yeah. And Steve, to your point, I mean, I'm not suggesting that these countries are ones in which the government supplies all the housing, but they are an actor.
Well, I think the public sector needs to be involved as well to fill gaps, particularly when housing starts. are now going to roll over. I think because, like I
Mhm.
said, we've all talked about on the show, right? It's like, yeah, well, building rental housing is not really that economically feasible. The numbers don't typically pencil that well, and so yeah, if we want more secure rental housing to give people an option away from, hey, you must buy because you want certainty. Like I can tell you, like one of the biggest reasons why my clientele stop renting and they go and buy is because they're a young family. They want the kid to go to a certain school catchment, and they want, their kid to continue to grow up with all their friends and be in the same neighborhood. And if their landlord is selling every 3 years and they're having to relocate, that's a horrible way to raise a family. And so that's one of the reasons why they're like, yeah, like it is more expensive for me to buy this house. We're giving out maybe cheaper rent, but like we want the security. And so I think that's really what's driving, because yeah, to your point, we don't have the system that a lot of Europe does, which is like it's common from a cultural perspective for a lot of Europeans to actually rent, and it's actually kind of almost weird to own.
Yeah. And it is. And I think, but they have a better rental system. Like the way we've been building rentals in Canada is backwards. Like and it actually kind of touched on when you said, they don't want to buy a home and have to get kicked out every 3 years. And this is a product of the fact that most of the rentals we've been building the past 2 decades are mom and pop owned single family homes, right? Yeah. Where you can get kicked out every year or every 2 years if they want to move into it, if they want to sell it, something that you cannot do, of course, if you live in a permanent rental housing that is like a purpose-built rental, right? So
and my point, John, is I fear that it's not that we've been doing it wrong, it's that our culture wasn't set up like that in the first place. And now we're trying to carve out this it's kind of like our transit problem. Europe believed most people didn't need automobiles to go from one city to the other. Maybe, like, or intercity travel, jumping on a train was just so common, and that was, even if you're well-to-do, you jump on the train. And so I fear, and I think we need to think a little bit more creatively, because just to catch up to what they've done is going to be impossible. It's their culture that set those norms. Just like in other countries, sorry, Steve, the culture of many people, many generations of a family living in a single dwelling that they then build on over a very long time. And I know, and I know from our respective parents' home countries, this is very common practice. You have the homestead, and the homestead, that plot just grows and grows and becomes a bigger house over time as you can afford it. That's another cultural thing. That no matter how many fourplexes laws you introduce here, we're so behind the curve in being able to make that financially or even culturally exciting. Sorry, Steve.
Yeah, because CMHC was originally created as an agency to build houses for soldiers coming back from the war in Canada. And so it's interesting to see that they kind of started as that, and they morphed basically into this like mortgage securitization machine. And obviously now they're slowly pivoting again, thankfully, back into an agency that I think is more or less incentivizing rental construction of new homes through their CMHC MLS Select or whatever, MLS Select program, basically, where it allows, for those that aren't familiar, if you're building rental housing in Canada, you're building a new ground up, a lot of the times what they'll do is they'll lend you financing below market rates. So very favorable construction financing. And then when the building is done, you could typically, assuming you follow all their check marks, you can usually get a 50-year amortization. And then you can get 10-year debt. So, in Canada, you typically get 5-year fixed. You could do 10-year fixed, and the rate, again, is going to be significantly below what you're going to get at any big bank. So it's good to see CMHC getting more in that direction, but a long way to go.
Great point, Steve. That's very interesting. So that leads me, I think, to our final point, which is the municipal election in Toronto. Some of these ideas, fine, we can all be cynical. I think we all are, because it's just the nature of the problem. We're not bad people. But some interesting ideas did get floated as a result of the Toronto election. Steve, there was talk about maybe reviving some of these municipal actors not to just be just a builder or just a financer or just a, maybe they get into land assembly. Maybe they get more active into other things. So those things were floated. And the winning candidate, Olivia Chow, has now been elected mayor. I think one of her ideas was to look at what Montreal apparently has, which is the ability to match any purchase price for any property under contract to be bought. The government can apparently, and I don't know the ins and outs, and we have to dig into it, can step in and offer the same price that was offered. And so it's like a form of, I guess, fancy expropriation. So apparently Olivia is going to research into that. And the idea there behind that is land assembly. The city is getting involved in that kind of stuff. So, John, what do you think of the mayor being Olivia Chow, and any chances that our housing situation will change?
I don't think it's going to change. I don't think it's going to change for market housing. I mean, I think one of the things she's pushing, of course, is more affordable rentals and, purpose built. I think that would be good. But again, I'm not optimistic that the city's going to flood the market with supply, man. They can't, or they're going to get into the development business. I mean, they're having a hard time getting restaurants to, approving patios on streets here. We have this Cafe Teal project where people can put patios on the sidewalk. It's like a month and a half late. It's like July, and people are starting to now put them out when they should have been out in May. So anyone who thinks the city can figure out how to ramp up housing, I don't know what they're thinking, but anyhow,
yeah. And even more related to housing, the Toronto is already the worst landlord in the city.
Well, exactly.
The buildings it owns are in terrible disrepair, and they're awful.
Yeah.
We should be ashamed. We were actually slumlords if you're a citizen of Toronto. So there is a lot to be negative about. I don't know, Steve, if you had any final thoughts. I'm going to try and end on a positive note.
Vancouver's doing something big, I heard, or BC. Where the provincial government, something to do with I don't know, I saw the announcement, like $500 million or something like that, to buy up rental housing or something like that.
Oh gosh, yeah, they've got I didn't even read too much into it, because I feel like half this stuff they just create this like pipe dream, and it's like I think so. They have an agency, the BC Housing Agency. It was actually just mirrored in a huge scandal. So apparently they're now back, and they've got a fund where, I don't remember the exact allocation. They have a fund that they're going to use to deploy to buy apartment buildings that are coming up for sale. So, again, private landlord has a 1970s apartment building that he's putting on the market. They have a fund apparently that they're going to deploy to then buy that housing and obviously try to operate it and as long-term rentals.
That's a smarter approach, quite frankly, than trying to, I mean, I don't know if the city's going to be able to build, but that's a smart approach. At least keep it in the city's book and potentially affordable.
Right of first refusal. I kind of like that idea.
Yeah, affordable. I guess it's more affordable housing, but keep in mind, like, if those buildings that are coming up for sale, obviously they're already owned by one landlord, so they're already basically purpose-built rental owned kind of thing. So it's not like the landlord's individually selling off each. So it wouldn't necessarily, it would just give the government, I guess, more flexibility to keep the rents low. But I find like those buildings, the rents are already so low, because
they are.
When you can raise rents, as a private, some of these guys are like mom and pop owners that bought the building 30 years ago, and they've just increased the rent, 2% a year over the last 30 years. Like the rent market rents are typically way below.
In Toronto, there's not a lot of them, but even the purpose-built buildings that are owned by corporations that have been here for decades, their rents are still low in Toronto.
Totally.
It's not just mom and pop. There are some corporations that own it. The problem is a lot of that set up in the 60s, 70s really dried up. So there just became for whatever reason, the incentives, and I think we should do a dive into why that happened. I think there's many factors, like you're saying, Steve, not just one. So
I think on a whole thing to wrap it up is I think we can all agree we need more rental housing, secured rental housing in general. I think it's a much needed void in the market. And I think, again, when tenants have more peace of mind and security, there's less incentive or demand for them to go and buy their own property.
And dare I say, and guys, I don't think you'll agree with me, as maybe this is a little out there, but maybe another product for investors to invest in, other than buying up condos, so they can become landlords, maybe freeing up some of that inventory for, end use homeowners that are trying to get into the market. So, maybe we can also, it's not just, I think, the housing, it's shifting the financialization incentives across all the product classes. And given that Canadians are investing in real estate, that's part of our investment.
Yeah.
So the idea is, can we have different things to invest in? Many people in Europe invest in these corporate apartment builders, and that's part of their investment portfolio. And that's how they get tied to the appreciation that real estate offers. So, I think like we're shaped a little bit by where we are. But I actually think you guys brought a lot of really interesting points. I'm going to end on a high note. I'm going to put up this image of Olivia Chow telling Justin Trudeau, the reason that these refugees are sleeping rough on the streets is your fault. We have not seen a lot of this so far. This is something I was surprising to see. It's funny. We haven't really seen premiers, even in Doug Ford and Justin Trudeau being of different parties here in Ontario, really pushing each other on housing. And I suspect because that a lot of the times the motivations behind all our major parties are not that far off of each other. Get elected, stay in. So it was kind of interesting to see that shot.
Our funding just got cut.
Exactly.
Who knows? Olivia felt something had to be said. Who can disagree with that? Whatever you think.
Very true.
Yeah. All right, guys. Well, we'll leave it there and look forward to another chat next month. We are going to return to taking all your questions, so please keep them coming. You can reach John at John Vasalis on Twitter, Steve at Steve Soretsky on Twitter. We're at Move Smartly. Please keep all your questions coming, or just put them in the comments to this episode here, and we'll get back to putting those great questions in as well. Thank you so much, Steve and John. I thought it was a really insightful chat this one.
Always a pleasure.
Yeah, man. Till next time.